Hello, Internet. Welcome back to my stock channel. This is James with another stock update analysis video on Citigroup, ticker symbol C. We're going to do a few banks today. We're going to see who might just have some disturbing anomalies in their charts. We're going to see if how they compare with each other. We're going to see what their comments are on exposure to variable rates. Just real quick videos. Citigroup, um, market cap $93 billion. They're a monster. 5-year chart on Citigroup down 34%. I owned this one at $2 once. I hate to brag or toot my own horn, but toot toot. 2009, after the banking crisis, I got it for $2, and it went to $50, and it looks like it's just stayed there ever since. 6 months down 1%, 1 month down 5%, 5 days down 7%, 1 day down 0.5%. Now we just analyzed Wells Fargo stock. They actually went up on Friday. This one went down 0.5% on Friday. I'm guessing they came out with a report saying that they do not have the similar exposure that Silicon Valley Bank had to variable rate capital that they went and got on a variable rate and then loaned out to people on 30-year mortgages at 3.5%, causing them to lose money. Even the late hour trades held the value all the way through nightfall. Now, first analysis is the companies don't tell the truth necessarily. If they say they're not exposed, well, that's what Silicon Valley said last week. They said it's no big deal. We don't have the same kind of problems. There's nothing to worry about. Everyone should buy another offering. Here we go. So we're going to just take a look at the news real quick. The banking stock is just too cheap. Best stocks. I don't see any news about their exposure or lack of exposure. I'm not saying there is any. It's a failure of news. These articles might not go back fast enough. No, this goes back 3 days, 7 hours, 3 days. Actually, nobody's commenting on this. This goes back to 3 days. Usually the bank itself would come out just to make the stockholder feel better and say, look, we're not exposed to this. This looks like a no comment so far. So I don't know. Let's see what the numbers say. Here is their income statement annually. Okay. COVID, big reduction in revenue, 9.57 billion compared to 66 billion. Well, hang on. 66 billion in revenue, 59 billion. So $7 billion didn't come in that year. It's because everybody was closed. This is an international bank. They're all over the world. They had a lot more people paying them during COVID than Wells Fargo did. Wells Fargo took the COVID beating like a halvesies. Like nobody sent them a dime during COVID. Not good. Revenue came back strong after COVID and fell off just a hair. $70 billion in revenue for 2022, $74 billion for 2021. So we see a slight decline in revenue. This is a $5 million decline. Actually, very similar numbers between the two banks. Wells Fargo was a $10 million decline. So Wells Fargo lost more of their revenue year over year than Citi did. So I would say whatever shit Wells Fargo is in is probably twice as bad as Citi. Citi lost, and I don't even know if they could lose it on that small of a revenue drop, but it looks like their net income went from 22 billion to 15. So 7 of it was profit. How do you do 5 less revenue and 7 less profit? Sounds like a fine or a cost, or I don't know. What the hell happened there? Why did their profit get decimated by more than the revenue fall? We're gonna have to look up some more news on Citi. Their balance sheet probably looks just like the balance sheet of every bank in town, and it does. Um, Assets and liabilities right in par with each other. Assets slightly larger than liabilities. Half of this is the loan, the other half of this is the note. $2.4 trillion in outstanding loans. They are probably 25% bigger than Wells Fargo on their number of outstanding loans. Total cash, $1.02 trillion. They also have 25% more money than Wells Fargo. Looks like a healthy position. I don't like the loss of profit year over year, especially in comparison to the slight decline. I don't like the slight decline. This is people pulling their money out of the bank or people not sending their payments in again, which is what you saw here. You go and make 10, 20-year loans. You don't expect to see a revenue collapse, or the revenue is like clad in iron contract. That contract needs to be broken for it to come down like that. In this case, it was broken by the government in COVID, but you could go back a long time. We're talking about the seasonal nature of banks with Wells Fargo. This one seems to defy that. Wells Fargo was strong in December. This one's strong in March. This one looks like a lot more balanced. This was clearly the worst quarter. It got smaller from here. This stayed the same. And December was actually a not very profitable month, only $3 billion versus them making $5 billion here. Very interesting. We do see the slight dip. We do see the loss of revenue. These could be car payments not coming in. These could be a few loan payments not coming in. Commercial real estate is having a problem. Their landlords didn't pay rent for a year. They weren't able to collect rent for a year, so they quit paying their bills. I guess they started paying them again this year, but they quit paying them this year maybe a little bit. But just that's a comparison video for Citigroup. I'm going to do another video in the future. We're going to find out more about news, find out why they lost so much money in 2022. Thank you very much. Subscribe to my channel and like.